All right. Good afternoon, everyone. It's Sunday, May 24th, about 4 p.m. here. I got Faisal on here with me. Faisal and I are going to discuss all the many things related to the stock market. By the end of today, the things that we're going to talk about is real estate. We're going to talk about top stocks for the week ahead. We're going to talk about maybe if we are in a bubble or not. We're going to talk about the SIBO's projections for quarter 3 in terms of if we're going to see significant growth and what kind of growth would that look like, and many other things. All right. So with that being said, welcome, Faisal.
Hey man, great to be here. How you doing?
Not too bad. It's a great Sunday today, and I'm just looking forward for the long weekend. What about yourself?
Yeah, man, I'm actually ready. I wish the market, could somehow trade Monday. I'm ready to get back in it, but I'll take advantage of this beautiful Memorial weekend. I want to thank all the veterans out there and everyone in service for doing their part and really making freedom a big part of this country. So thank you so much, and I hope everyone has a great Memorial Day weekend.
Yeah, I hope so too, man. And I totally agree with you that the people who have lost their lives over the last several decades or entire existence of America have obviously given a tremendous effort to bringing the country to where it is right now. And unfortunately, on Memorial Day, we kind of have this very sticky situation of being in an economy that's down so much with millions of people who have lost their jobs, and then more and more deaths piling up. And so obviously I definitely want to thank the nurses and the doctors and all the people on the front line, saving lives out there, because I think these are definitely the true heroes right now.
Well
Um,
said. Yeah.
so with that being said, Faisal, it seems like we're still sort of in a dire situation when it comes to the coronavirus. Yet the market still is responding pretty strongly. Can you give us a recap of what you saw in the last week, and tell us what's on your mind?
Yeah, so this last week was pretty eventful. I think we got that rally off of the positive Moderna news, that they were seeing some real progress in their human vaccine trials Monday, and so the market immediately opened up. I want to say like 2%, was it? It opened up high.
Yeah, it was right here.
Yeah, I mean, it gapped up instantly because, as we've seen before, any positive progress on vaccine or medical stuff like with remdesivir from Gilead, it really ends up pushing the market and becoming a strong catalyst in the short term, at least. But what was interesting was when we kind of got that report that negated a lot of the positivity in that Moderna report, and plus, we also got that word that their their executives are dumping stock like instantly. I don't know. There was a lot of shady stuff around
Yeah,
Moderna at that time. The market really held it well. It did sell off towards the end, but for the most part, if you guys were reading what I was writing during that time, I was really impressed with what the leaders were showing in the market, and there really wasn't any breakdowns yet. They did come, to decent levels, but that's not to say that I expected them to break down at all. I mean, throughout the week, I want to say from Tuesday or Wednesday on, uh, most of these stocks really remained flat. They held their support levels, and so now it really leaves a lot on Tuesday to determine which way the market wants to go. Because it could go either way. I'm not here to say that it's going to go up 100%, even though I'm betting on that side, or that it's going to go down. Um, but you really can't base whether or not it's going to go up or down on the real economy anymore. Like we all know where we're at in terms of things reopening and the medical progress. So at this point, it's just kind of like taking it day by day and letting the market tell us how it exactly wants to rebalance out and when it exactly wants to rebalance out.
yeah, and you're absolutely right. It definitely does not seem like the market is any bit connected to the underlying economy, and that could either be because we had such an aggressive sell off to the downside, and maybe all these multitude of factors of how bad the economy is right now was factored into the sell off, and now the rebound is projecting out maybe 6 months, maybe 3 4 quarters ahead. We don't quite know yet, but the interesting point about the Moderna news is something that I want to talk about a little bit more. So this was actually the gap up that we saw due to the Moderna news last Monday when market opened. This was a sell-off that happened actually right around the time when the Moderna trial, I think, basically was a sham, or what seemed to be, like a false hopium-based news. And then market again picked it back up the following day, and then obviously drove the prices still ahead of the still above the recent sell-off. The one thing that I've definitely noticed, and I'm sure you have too, is no matter how bad the bad news has been over the last several months, basically, from this bottom that we put in March 24th to where we are right now in May 24th, which is almost 2 months now. Well, the one thing that we could say is the market has completely just avoided and ignored all the bad news, whether it's unemployment numbers, whether it's bankruptcies looming, whether it's bad vaccine trials, or rather vaccine trials that seem to be good but now are bad. All the GDP forecasts that are coming out, nothing has phased this market. And I think that to me is very surprising. And obviously, at this stage, we cannot deny the bullishness, or rather, I wouldn't say the bullishness, but rather its ability to not drop, right? And that the idea of bullishness would be if the market pressed up higher from here, but rather it's actually technically been inside a range, technically since this area right here, April 13th. Once it created this low, hit that double bottom low, we put in this high, and we're pretty much near those highs again. So that's really the range that we're in right now. Now, are you thinking that once we get a break outside the range to the upside or the downside, do you look at ranges in the same way that I do, in that a breakout to the upside means that, all right, it's time to start picking up more positions to the long side, and break to the downside is, all right, now we got to maybe cut down and trim down some positions, or, maybe even go short?
Well, I'm overwhelmingly I think we're going to come out of this, and any type of pullback that we do see, I don't think it's going to be that severe. I think the aggressive stance from the Fed, how much the government is willing to put in, and all the safety factors that are in place, I think will really help the majority of industries survive this storm. I think there will be some industries, like especially those small mom and pop restaurants and other highly leveraged businesses, they will sadly not make it. But the majority of the companies that do make up the GDP and do make up a large portion of the economy, they will end up surviving from this. And there may be like some really positive stuff that ends up coming out of this in terms of things that will benefit the market, whether it's like a capital gains tax that may be a capital gains tax holiday that may be initiated, or things that will spur just market investment in general, as Trump ends up running for the elections coming in November. He's going to try and do everything to get this market back on track. So I wouldn't even discount that out. I think there is so much optimism at this point because of what we're seeing from the CBO numbers that came out in the last couple of days, predicting that GDP in Q3 would actually rise over 20%, which is pretty unbelievable considering we regressed 37% in Q2. And to have that type of spike back, not only does it support the V-shaped recovery people who were thinking that, but I mean, it's a testament to just how much we can get done even in a crisis. And I think there was a lot of doomsday scenario that did not end up getting to that degree. But obviously there is some losses to that extent in certain industries, like I said, in the restaurant industry. But as far as ranges are concerned, yeah, from a technical perspective, if we start to break out here, sure, I'm going to buy some more because I'm overwhelmingly long. But if we start to break down from the ranges, I'll trim, cut a lot of my short-term trades, but I will not cut my long-term positions at all. Like I don't think we're going to head down to the lows that we had in mid-March. So if I picked up a good amount of long-term stock around that level, I don't think I'm going to be liquidating it, considering I don't even think we're going to get to there anytime soon.
Yeah, that's a fair point. So, one thing I do want to talk about is the quarter over quarter, GDP growth that you're talking about Q3. do you think that, because we had such a big collapse in Q2 productivity, obviously the Q3 is going to look golden, even if it's, slightly better when it comes to a comparison of Q2, because I take it that this is just, quarter over quarter recovery for the GDP, which is not, like a yearly base quarter over quarter recovery. Is that how this is based, or are you?
I think it's more short term. Like they saw a regression in about 37%, in Q2, and then now they're expecting a real strong bounce up. And I think that really goes against a lot of what we initially thought, in that when you shut down businesses to the degree where you get a 37% drop in GDP, you should not get this sharp of a bounce back. It should take some time. Like you should come back, maybe you have negative 2% GDP, and then you get positive like 10%. To have a really sharp bounce back, like 21.5% on these numbers, I think is really significant. It really shows the strength of the underlying economy that continues to run, even though there are massive job losses in multiple sectors of the economy.
Yeah, see, this is where I kind of am a little bit lost, because I don't see how you can have such a strong bounce back when you have 40 million people unemployed, and just now you're starting to see companies like Dell and IBM starting to cut jobs. And then on top of that, the interesting thing is, going into Q3, CFOs, CEOs will have to make important decisions for their companies. And this is across the board, whether you're in the financial sector, whether you're in tech, software, retail, anywhere, right? And the one big decision that they'll have to make is, how do we cut expenses, and how will we raise cash or build revenue back for the lost quarters, as well as, a Q3 and Q4 economy that will look slightly more depressed. And the examples of Dell and IBM, I cannot think that those are the only few examples we're going to see. Right? I would probably figure that Q3 and Q4, we're going to see massive amounts of companies cutting down their hiring processes, cutting down, maybe even having to fire more people. And the job losses that we've seen so far is not majority white collar. The upcoming job losses, in my opinion, are going to be that white collar wave that is going to come out. And so that will then, sort of supersede the losses of, jobs that we've seen in the economy, because these are the jobs that are really holding up corporate America. But corporate America itself is struggling beneath, because they've been kind of stuck in this bad, scenario, in this bad situation for the last quarter, and maybe even going into quarter three. So I can't imagine how these large scale corporations and companies are not going to impact corporate America, or bottom line of the economy, even worse so. So I guess, what's your opinion on that?
It just all depends if these big companies can keep up like some sustainability as far as their customer base. Because if you check out a lot of the discretionary spending numbers, despite the like 30 million job losses, whether it's from unemployment being very high and the stimulus check or whatever, or just the wealth transfer between the older generation and new generation, you could do a couple reasons. Discretionary spending numbers have not dropped that much at all. And I don't know if they did it themselves, but this data I believe was from Alpine Macro, and they did some study on discretionary spending, and I think it came out, I want to say, a week ago. So this data is fairly new. It's already gone through a lot of the job loss and done the data on that. So as long as discretionary spending can maintain at a high level as it is now, I think you will see less job loss in at least the corporate America, because as long as you can maintain that customer base for these companies, I think there will still be a demand for their services.
Yeah, that's a fair point. Do you think that we are in a bubble?
Um, I don't think so. It's hard to determine, because like the stocks that you could say are in a bubble, definitely you could point to the software sector. Um, I don't know how to value this type of game-changing technology, like connective interface software. Like when I hear a company like Facebook say 50% of our workforce will be remote in the next 5 to 10 years, I think, oh my God, this workforce like Slack is going to be a necessity for almost every company and every major company for sure, because the growth of remote jobs is going to be so significant that you will need technology for that individual user to be connected, secured, and there's going to be multiple layers and companies that will be able to fill that layer. Um, I'm sorry, those multiple layers from the individual's part, or I'm sorry, the employee's part and the employer's part. And so I think it's just a challenge to try and discount that future growth because the impact would be so significant. Um, it's not like the dot-com bubble where these companies did not have any earnings or something like that, or they weren't promised. They weren't promising earnings for the next 5 to 10 years. No, these companies are saying we're going to be profitable within 2 years, 3 years, and the growth pace, the innovation pace, I'm sorry, kind of supports that. Companies are adopting these new technologies, whether it's cybersecurity, connective software. They are going out and shopping it, and these companies that are providing it are becoming profitable. So I don't know if we're in a I don't know if those stocks are in a bubble now. They are super expensive on a valuation basis, but it's tough to discount their impact for the next 5 to 10 years.
Yeah, I think specifically Facebook and Google, they're interesting stocks, and obviously I am of the opinion that there's a lot of stocks that are well beyond the current valuations, or rather overvalued. And kind of like in your boat, is it's hard to price these stocks given the nature of the environment that we're in, and also we can't even think 1 or 2 weeks ahead of how the world around us is going to be reshaped due to coronavirus, due to the whole politics behind everything, let alone a year or two out. Now, I'm not saying that companies like Facebook or Google are going to be shut down or bankrupt or anything, but I just find it hard to think that Facebook's bottom line or Google's bottom line, companies like this that have their bottom line severely dependent on ad revenue, are not going to be impacted in a major way going forward, especially given the fact that, we still have not completely come out of the whole coronavirus recession, if you will. Nor do we have any clarity of when things are going to get better. I mean, projections are one thing, but reality is another, which is, the average person is still really dealing with, not being able to find a job, or having to go on unemployment, or, even the slow impending doom of the bankruptcies and layoffs that are still coming through the pipeline. For example, Friday, I think I was just telling you, Hertz itself was announcing that they declared bankruptcy. Avis, I think, is just down the pipeline. I know Ford is right up there. There's many, many companies that are just right on the brink of failure, and I just can't imagine that all these companies across the board are going through such tough, tough times economically, as well as overall the consumer sentiment is still struggling. It's just hard for me to sort of look out to a 12-month timeline and think that the valuations are going to stay where they are, or the stock prices are going to stay where they are. What are your thoughts on that?
Well, it's a winners and it's a losers market. Like, you're gonna have the winners like the Facebook that are able to dominate. I used to agree with you on that. As you lose your small customer base, or I'm sorry, small business customer base in terms of who's buying your ads, I thought Facebook would start to diminish. But when they came out in their earnings report, they really said they didn't see that much change in their ad activity. And I thought that was very interesting. But then I started to think, okay, more people are using Facebook. Obviously, someone, whether it's a big company or small company, someone is going to utilize that there are more people on this platform than ever before, and they're probably spending more time because, one, people are working at home. They probably have Facebook up. They can probably access it a little bit more frequently. They can probably do things like online shopping during work hours much more easily. Like, even though there was one drop off, there is something that benefits. And I think that's just been the theme of this market. There are winners and there are losers. And Hertz is one that had been a struggling company because of how much Uber had taken away from their rental space. But this whole COVID thing, when travel stopped, I mean, was the nail in the coffin. And so you're really going to see this kind of cleanse, I think, of
Yeah.
the businesses that were over levered and not well positioned beforehand. It just, as some die down, others will go up somehow, some which way. Some other company will benefit from these companies going down. I think that growth is lost. Obviously, there is job loss, and there's job loss that probably will not be made up from the counter growth. But as of right now, the like that's just, I think, how the stock market is balancing things, and that's why it continues to go up.
Yeah. The interesting thing is, I feel like the speed of the cycle that we're seeing and the intervention of the Fed is, it just seems dangerous in some ways, because what we're doing is we're buying time, we're buying companies time, but you cannot see that businesses will come back to life to pre-COVID levels, or you cannot will the businesses back to life and will them into existence by still being failing companies, right? So it seems like so much money and so much effort is going into ensuring that these major companies do not fall, and that money is not going to the right places, like maybe the small mom and pop stores, or your average person who's really suffering due to economic circumstances.
Mm-hmm.
And so throwing money at impending insolvencies does not seem like the answer. And I can't see it. I guess it's just really hard for me to see a future, or at least the foreseeable future, at least in the next 2 to 4 quarters, that we don't see a major pullback in the market itself and the economy again when we start seeing these companies um, fail or go bankrupt. I guess that's how I'm looking at it.
Yeah, I think down the line, I just want to wait and see exactly how the money gets into Main Street. Exactly what you said. It's not. I think it's kind of being, what we've seen actually is amazing, with PayPal and Square stepping up to fill in that Main Street void that banks kind of took too long. So I don't know. It just I want to wait and see how things shake out, because I agree Main Street is suffering, but there is new technology that's there, and I want to credit PayPal and Square for being that intermediary to connect and give these small businesses that instant money that they need. So I want to see how things play out within the next month. I think anything could happen, because demand may not come back. People may not come back to shop at the same level. And I don't know how much these businesses can really, you know, survive with low demand and full operations. So it'll be interesting to see. It's still a wait and see for me.
Yeah. The interesting thing is, I feel like Jerome Powell has literally been going on things like 60 Minutes and CNBC. Whenever the market falls any little bit, I feel like he's out there tweeting or, getting up interviews, because he needs the market to sort of feel that positive, emotion that, hey, things are good. Fed is going to do whatever it takes to backstop the market. And I feel like his outcry to Congress, for more stimulus in terms of legislation, is I feel like he's just begging, because he wants to make sure that Congress will allow him to print more money. I mean, obviously, without their approval, you can't just willy-nilly print money. But if Congress feels like, hey, we are on a bad path ahead, we can't just keep printing money, especially if a majority of this money is going towards corporations, especially these zombie corporations. How are we ever going to help the average person who's really struggling? And with the average person, I actually wanted to transition this topic into real estate, which is, there are a lot of impending mortgage bankruptcies, insolvencies, delinquencies that are piling up in the real estate market. And I think last week we were talking about real estate as the one sector that you saw was doing well. And I actually dug into it a little bit more. And I told you about the Hassan Minaj episode that I saw about, how there's these big companies like, what's it called? Like Invitation Homes. And I forget, there's like a bunch of companies that are out there, buying up a lot of real estate. And, pre-COVID, obviously, there was a lot of people, who were probably looking to buy homes naturally, whether it was COVID or not. And so with these companies who typically already buy a lot of property. What I saw was, these companies are now targeting the more distressed, debt, the distressed mortgages out there, and they are, simultaneously buying a home in swaths around New York, San Francisco, California. I mean, pretty much anywhere, Indiana, and so it seems like the real estate numbers might be skewed because it's what we really see happening is, whether you want to read this Wall Street Journal article, real estate investors are eyeing potential bonanza in the distressed sales in the housing market. Or there's another one over here that I found in terms of the Zillow named this article the silver tsunami, which is their way of saying that there's a lot of older people who are out there looking to sell their homes, okay? And unfortunately, disproportionately, millennials who have actually been hurt a lot more due to the coronavirus job losses are sitting on the sidelines thinking, well, crap, like I wanted to buy a home this year, but I lost my job, or I don't know how the next 12 months are going to go. So I think there's 1.2 or 1.4 million jobs lost in the 60 plus adults and older in terms of people who were looking to sell their homes. And with those people who lost their jobs, who were looking to sell their homes, which are the older crowd, to the millennials who are looking to buy the homes, it's like now a supply influx versus a demand drop, because the supply was supposed to be the older generation and the demand was supposed to be the younger generation. But now the supply, which is the older generation, needs to sell their homes faster because they're also losing jobs, or they're maybe looking at this economy as, hey, maybe I need to worry more about my retirement, worry more about what may happen over the next several years. And the demand, being the millennials, are thinking, well, I don't know if I want to buy a home right now because I don't know what the next 12 months look like. So, I wanted to let you know that doing more research into real estate market, it doesn't seem all that rosy because the numbers themselves are not backing up what the real data out there is, from an individual standpoint. It's rather homes may be getting bought, but it's not the real people behind them. It's, these large Wall Street VC companies or these bigger firms that are buying up, entire neighborhoods and entire suburbs.
Mm-hmm. Yeah, no, I think you're absolutely right on the fact that when you see some economic downturn in terms of job loss and everything, yeah, you should definitely see housing demand drop. I think that's only natural. I was just kind of saying it based on when we saw a 50% drop in the housing sector, to have the numbers that Redfin and Zillow were putting out. I think Redfin even put out that recently housing demand, or one key stat, I believe it was housing demand was actually up 16% above pre-COVID levels. So that type of demand, sure, you could say it's fueled by a lot of these real estate investors doing that, which I'm sure they are. But I don't even get why, because the prices really we haven't seen prices actually drop that much significantly compared to previous recessions. They're actually staying very stable. So sellers are actually saying, no, we really don't want to sell too low. We want to wait this out. And buyers are actually coming out a little bit, whether they're big or small, and saying, well, we're ready to pay up. It's a different dynamic, and I think that it's one that's healthy. I think demand will start to slowly eke back in as job creation starts to come back in. But you're right, on face value, there is a little bit more institutional buying than small consumer, which I think is not as positive as previously thought.
Yeah. Let's pivot to, I guess something more positive, which is how can we look at the market, say for the week ahead or, a couple weeks ahead, and, the people who are looking at this grim news around them, obviously there's money to be made on either side of the market. You are obviously leading someone who's a little bit more on the bullish side. And so what are some of the positions that you're looking at for the week ahead, and how can people, in a sense, unfortunately to say, profit off this kind of situation?
Off of the housing situation?
Well, off of the housing situation as just, yeah, I mean, we could talk about the housing situation, but the market in general, because I feel like some way, somehow, someone is going to profit off this. At least it might as well be our viewers, you know?
Yeah, I mean, in terms of the market dropping, like if there's one sector I want to invest in, actually there's two. You just got to stick with healthcare, which is ending up having the most innovation in terms of not just relating to the COVID-19 stuff, but in terms of like invasive surgery development and progress. There's a lot of stuff that's going, the genomic stuff. I mean, there's a lot of innovation in this sector, and you kind of just want to stay within healthcare. And then technology, you already know, technology's been killing it for the past 2 years because they've been at the core of creating the new enterprise cloud systems and connecting the company and the employee. And they've done some amazing things to lift the standard of business. So I would just stay within those two areas. Some stocks that I have on my list that I'm keeping an eye out for this week are GMed, Global Medical Supply. They do a lot of stuff with spinal surgeries. They're a spinal medical instrument company, and they also do a lot of progress in invasive surgery. And so while they do specialize in fixing people the old way, they actually have developed, put aside a lot of money into research to these new growth areas like invasive surgery and figuring out what is the best way to take care of the patient's spine without having to cut them open. So there's a lot of growth in that company, I think, and one that could have a ton of innovation down the road. And then technically speaking, in the tech sector, I like Google. I think that stock is, I'm surprised it hasn't made an all-time high. You have had Facebook make an all-time high, Amazon make an all-time high. Microsoft is close. I think Google is just a little ways way behind. They've obviously been hurt a little bit from their ad revenue decreasing, but I think overall the estimates still look fine, and 2021 should be a record year in terms of earnings and revenue. So there's no reason that stock should not trade above its high. And then lastly, I want to see if I can get back into applied materials. As you know, I did trade this stock a month ago, made around, I think, 13% in it, sold it before its earnings. It's gotten hit a little bit since then for technical reasons. The earnings were perfectly fine. Everything is perfectly fine in terms of the semi-equipment space. But I'm looking to get back in sometime this week. Hopefully I can see the right signs in the semi sector and so on and so forth. So I just want to stay within tech and healthcare for the week.
Yeah. What about, you said you were looking at other things on the biotech side. What were some other stocks that you mentioned? Because I think in the Advantage side, you had mentioned something in, was it stock of the day right here?
Was it Illumina?
Maybe it was Illumina, actually. Yeah.
Illumina makes a lot of the.
What's the ticker for that?
I'm sorry, ILMN. Yeah, I'm actually still in this name. Yeah, it's actually done great. I'm up, I want to say like 10, 12%, something like that. I got in at 320 something. You can even go back to an alert if you don't believe me. So this stock is one that they make a lot of the testing equipment that's used. They've actually even gotten into the COVID business. People they actually provide some of the equipment that helps test the same strand to see if you got COVID or not. But they're also very big, and the reason why I liked them, in the genetics business. And so people like CRISPR got to buy their equipment from them in order to do their stuff. 23andMe also buys their equipment from them or something like that. That's who they are in that market. They are the supplier of medical instruments for testing. So I really like them. They're a great company fundamentally. I'm not really I'm not an expert on biotech, but there are a couple companies that are interesting. You could always play the big pharma route, which is how I mainly like to do it. I like Bristol Myers and Merck and Johnson Johnson, and they're all pretty good. Eli Lilly, but a biotech that's really stood out to me recently. I don't really know much about their specific drugs. I'm not a biochemist or anything like that, but ACAD. This company has pretty unique fundamentals, raw fundamentals for a biotech company. And I really like to look long lists at companies and compare their fundamentals and technicals and stuff and see which one's the best. And this one was just one that stood out in terms of having earnings stability separate from any other biotech company. So I would keep an eye out for this one in that space.
Yeah. I wanted to go back to Illumina because I wanted to just show our viewers right now that you put out this alert on Illumina with the stock of the day, May 12th. And on May 12th, I think the price was, I think it closed right around 320. And currently, I think as market close on Friday, it was 354 or so. So that was about a good 10.5, 11% gain total that we've seen in the last 2 weeks or so. So this was really great research, and I'm really glad you provide this kind of content to our community. And you also mentioned, other stocks with it. So one of the things that I wanted to talk about is when it comes to fundamentals research, right? I think I've asked you this question before, but I wanted to share it with our viewers again. Do you buy a stock, and you could say this percentage-wise, do you buy a stock 50% fundamentals and 50% technicals, or 80% fundamentals, 20 technicals? How do you sort of do the math on that?
So here's the key. I mentioned it a little bit in the last live stream that we did. Here is the key to being a successful technician is it has to be backed by solid fundamentals. Otherwise, technical stuff does not matter, in my opinion. You can be the best technician and look at like penny stocks or whatever, do all that junk or whatever. But if your technicals are not matched by fundamentals that deserve to be trading higher, whether it's you see value in a low PE or however you judge fundamentally, those fundamentals will support those technical prices. So I always go into stocks, always. Like, I don't think I've ever gotten into a stock that I did not fundamentally like. It always has to start off with the fundamentals. And then, actually, you know what? It actually has to start off with the sector. You invest in the sector, you see which one has the most near-term momentum, and at least for my strategy. And then you pick the best ones in that sector and industry in terms of which one has the best fundamentals, and then you kind of pick, okay, which one has the best timing for the time frame that I'm looking to get into. So it really is like, I don't know, it's 100% fundamental in the beginning. You have to be completely sold on it, and then it's 100% technical. You have to find the unique pattern that this stock kind of appears by. So that's kind of how I do it on my end.
No, I think that's a great way of looking at companies. I mean, obviously, I think we want to evaluate companies based on what they're really doing behind the scenes in terms of their business outlook itself. Unfortunately, I think it just seems like nowadays, due to valuations, the way they are, due to economic circumstances, it's very hard for me to look at companies in terms of the way they're priced right now without thinking that, well, their valuations make no sense, based on the current environment, or even, how uncertain the forward projections look, for 2 quarters or 4 quarters ahead.
Yeah,
but with that,
like that's the thing. There are so many companies that are putting out guidance, at least for this year. I know the overall sentiment is kind of is really negative in that majority of these big companies have withdrawn full year guidance, at least for this year. But there are some winners, and like you're seeing with Illumina, they put out guidance for this year. Imply, another one that I'm in right now too, that I've let you guys know, they said that they were going to grow every single quarter this year. And that was after analysts said, do you expect, even with the headwinds that you're seeing from COVID, how do you expect that to lay out in their business? And they're like, let me tell you something, we are going to grow every quarter this year. And when I heard that, I was like, okay, what other company is telling me that? There's not that many. So it's really about doing your homework and finding out who is putting out the most unique things relative to everyone else. Because there are a lot of companies that'll mail it in and say, well, it's better to give no guidance than give a smaller range of guidance or whatever. And I think that's been the trend, at least for this quarter. But the companies that are standing out, that are putting out stuff for this year and next year, I think you gotta trust that they're doing their homework, because it'd be a lot easier to just say, we're not giving guidance for this year, it's too uncertain.
Yeah. Those are good points. Lastly, I wanted to discuss, something that has really been itching at me, which is, we've discussed how there's all these platforms that have come up, retail investors really just piling into the stock market. I mean, at least every 3 or 4 days, I've seen some discussion in my fraternity group or some social groups that I'm a part of, or just random, comments on Instagram or Twitter or Facebook, people talking about, they're longing this stock and they're buying this thing on Robinhood, or they're buying, these calls on, Robinhood or eToro. And I think that scares me quite a bit, because it seems like this is the bubble that I was talking about. Aside from the bubble, I personally think that we are in terms of the entire stock market, or at least there's many bubbles out there. One being the stock market. It just seems like the worst time to be positioned as a retail trader when you start looking at some of these data points of small trader open call option purchases, okay? And these are by millions of contracts. And you can see these have gone up significantly. Again, these are your average, retailers, like people probably net worth less than maybe $1 million or less, right? Let me see, E-Trade and TD Ameritrade's number of trades, okay? Significantly higher. So these are people who are actually thinking that they can actively get into the stock market and start trading it on an active basis. Third point, number of Robinhood users holding major index ETFs, SPY, DIA, QQQ, and IWN. And then on top of that, I saw this thing, which was really hilarious, which is oil ETFs, as well as, things like airlines, right? Again, Robinhood users piling on to long positions. When you see someone like Warren Buffett selling airlines, you see the average Robinhood user, piling onto the buy side. Is this something that you look at and you say, holy crap, this is like a disaster waiting to happen? Or, does this skew your thinking in any way?
Yeah, I think we touched a little bit on this in the last video. It would skew my thinking, the raw numbers. If you look at total participation of the retail investor in this market, sure, it would make you a little nervous. But when you look at exactly what they're investing in, you can see why they are buying and holding. They are buying these airline stocks that are like, they're piling into pretty much 10 stocks. Most popular ones that have been sunk the lowest. And I think that's just, people may have sold in the last recession. They may be thinking, hey, it's usually a good time to buy when it's bad. And from the people that I've talked to, people who have money who have asked me what my opinion on what to invest in, they usually say, what about airlines? They're down so much. Like they were trading at so high, like Boeing was trading at $400 and it's at $100. Like, what do you think about that? That's all that it is. It's all about relative to where it was. And I think people have a misconception of value at a certain time and how much cheaper things can get, even if they are cheap at the moment. And so the retail investor seems to be just in one sector. They're missing out. Yeah. I think they didn't buy the Microsofts or the Apples or the Facebooks. No, I think they piled into the airlines, and it was a good trade in the beginning, but a lot of them probably did not take profit, and it's come back down to near the lows. So sure, I'm a little bit like, okay, their participation is high, but they're not making any money. If they were making money, I'd be a little bit worried.
Yeah, that's true. Obviously, retail investors more often than not do not understand when to take profit, when to get out, and they often hold, back into their break-even point or even into losses, and then eventually to selling at losses. Well, last point, I want to do something interesting by the end of our video, which is what is an unpopular opinion that you have regarding, the stock market or a particular stock that you want to share with us?
An unpopular opinion. I don't know. I'm a pretty neutral guy in this market. I continue to believe that because there's so much negativity, that there are so many shorts and people looking at the real economy and saying the stock market needs to reflect the real economy. I just think that's a recipe for the market to go up and not a recipe for the market to go down. And I think as we continue to climb all the negative news, I think it's going to be something like a really good data point where all the 50 states are reopening and everything is looking fine. I think the market will sell off on some good news like that. I think that's my unpopular opinion. I'm really waiting for the good news to come out so that I can get out of all my stocks. Because I think then the market, once people start to jump back in and think, okay, the real economy will start to catch back up to the stock market. No, I think that's when everything rebalances and the market goes down and the real economy starts to rise up and we'll come back to a sort of equilibrium in that aspect.
Yeah, I think that's a great opinion to have. I mean, I
It's a
totally believe
neutral
in that.
opinion. I mean, I
It
don't even know. Like, I don't pretend to know what's gonna happen. So it's just a wait and see. It it could go any which way.
right, right. No, that's a fair point. Um, oh, well, any last thoughts that you have? Anything that you wanted to talk about?
Yeah. So I actually got a lot of questions this week regarding what to do with Chinese stocks and how much to value the rising tensions between China and the U.S. And I just got to say, for the most part, I believe everything will be noise. It'll create a lot of buying opportunities for stocks like Alibaba and JD. Um, but there is one dark horse scenario that could pop up, and that's if the U.S. cancels China's debt. Because once that happens, I think the U.S. opens a Pandora's box to like just ruining our entire reputation and credit system. I mean, who would want to buy our debt knowing that we could renege at any time? I think it would just be the worst thing that could happen for the United States. It would be way worse for the U.S. than it would be China. And
Yeah,
Trump has kind of threatened that he may do that. I think his economic advisor said that's not on the table, but even talk of that, that's the worst scenario. I can't believe that there's even a word of that. But that's just one headline that
right.
I would look out for.
Yeah, that's an interesting point because I was actually reading some data about 10-year notes, and I think the Fed started opening up 30-year bond notes too. Um, I don't know where I saw it, but I'm going to pull that up and share it with our viewers. So typically, the interest around recession times for American Treasury bonds has typically been high. What we see in this cycle that we're in currently, we have seen lesser interest in American bonds, American treasuries, than we have not only in the last recession, which is the 2008, 2009, but also, I think it was 83 or 87, whenever that was. So the interest definitely from the world is far less in terms of American bonds than it was over the last two big periods where people saw that, wait a second, like if I'm going to put my money anywhere, it's probably going to be American, treasuries. Now, I don't know why that is. I don't know if there's sort of maybe a delay in that. Maybe, who knows? Maybe the next time the market dumps or the bonds, become cheaper or whatever, we might see, a huge cycle of other sovereign nations picking up our bonds. But present rate, going along with your thinking of how can the United States completely mess this up, we can make the unpopular, very bad decision of canceling China's debt, and then on top of that, maybe other governments or other countries around the world kind of see the position that we're in, and they may not want to be in the same buying boat that they were in 2008 or the 80s. So I do agree with you that it would be a very, very bad decision, especially given the way we're kind of on the path of delisting these companies from China. It almost seems imminent, that we are on this war path, or at least an economic war path with China.
Yeah, it's definitely rising. I'll tell you that. It probably will be heated until the election too. I think Trump is going to really use this China game to really rally his support and kind of shift a little bit of the blame regarding whether it's a low stock market or the virus. I think China is going to be the target until the election for sure.
Yeah, yeah, that's a great point. Um, uh, One last thing that I wanted to discuss with you, and this is something that I read on Elon Musk's Twitter. I think this was a couple of years ago. And I want to get your opinion on this because as someone, at least myself, and I'm sure you do too, which is the belief in free market and capitalism. I think we believe that in many ways, at least I do, that the Fed should not be intervening so much to the point where companies are almost getting high on this supply of free money. But then on top of that, Elon Musk also recently said, or again 2 years ago, he said that they should ban short selling. And I don't know if you read Trump's Twitter feed, but recently he also alluded towards that. And he said that in, with a question mark, like, is this even barely legal? Question mark, right? Because people are
What?
quote unquote betting against America's stock market, or betting against America. It was something along those lines. Again, I think, knowing Trump, that he never outright says things when it comes to that stuff. He retweets things or he alludes to it. But what is your opinion on, if countries like America go through the same process like Italy or China did, which is they actually did ban short selling in the stock market?
Oh my
What's your
God.
opinion on that?
I can't believe that's real. This is the first time I'm hearing about it. That's crazy. No,
Yeah,
that would just be catastrophic. I mean, first of all, you already have a lot of institutions short selling. I mean, what are you supposed to do with them? They have the right to short sell a company that does not deserve the valuation that it has. I mean, everyone has a right. That's America, the freedom to choose. Hey, I think this thing is going to go up, or hey, I think this is going to go down. Um, I I can't believe he's alluding to it. I don't think he'll do it. I really don't think so. But that's crazy to think that. I'm not surprised Elon Musk tweeted that. He's hated short selling
yeah.
for so long.
He
but
calls he calls short selling value destruction. Like he thinks that they create no value. All they really do is try to destroy a company's price or value.
in,
Which again, I mean,
yeah,
it's
I mean,
ridiculous.
in some cases, aggressively, yeah, you can really manipulate a company's uh, real term value by that much shorting. We've seen it in a couple instances, like Herbalife or something like that. We've seen really high manipulation through shorting, but it doesn't happen that much to the point where I would feel like it would be okay to take away that freedom from me, like whether or not I want to short something because I think it deserves to go down, or whether or not I want to buy something because I think it's going to go high. It's not about that at all. It's about that freedom to have that. So I hope
Yeah,
that's preserved forever, like no matter what.
right. I totally agree. And it's hard to decide, when even if the market prevails. And I mean, listen, you can't have it both ways. When companies get pushed to insane valuations, like a garbage company like WeWork was supposed to be valued at $30 billion, and now it's closer to 2.7. When these valuations come out, you can't have it both ways, where you can value them so aggressively high, but then you also don't get to pressure them aggressively low to the downside due to the short sellers coming in and actually pressuring the stock down. It's just
Totally right.
not fair, because it's you can't have it both ways, where these valuations can be insanely high, but then not have people short sell the stock into the ground.
Yeah, I totally agree. Well
But
said.
but anyway, I think that's a topic that I want to close on, because I just want to discuss some of these random topics that are happening in the Twitter sphere or around the world, that I don't think most people pick up on, because they almost like brush it away as well, Trump's just saying this, or Elon Musk is just saying this randomly. These people have significant influence in politics, in
He's the
policies,
president.
in economy. Right, exactly. And so you can't just tweet something random like that and don't, not think that there's going to be some, feedback or some kind of, I don't know, blowback from other investors. And so it just goes to show that we are in a very precarious situation in America, where discussions like this are even thought of coming up. I mean, the whole China thing was already, a bit crazy to me, but now when we get retweets from the president or Elon Musk, it just goes to show that, like, there's so much fragility in the markets themselves, that I would not be surprised if the more crazier things are coming onto the soundboard on a day-to-day basis. And it just seems like 2020 itself has already been insanely, like a roller coaster. I cannot discount that it gets crazier from here on.
Totally agree, man. It's going to be a crazy ride to the end.
Yeah. Well, anyway, I definitely appreciate you joining. Again, for those of you who are watching us, I want to thank you for watching our videos and continuously supporting us. If you would like to learn more of how to trade the stock market, how to trade the crypto market, the Forex markets, come join our community. The Discord link is below. You can hit subscribe now to catch more of our videos. You can hit the thumbs up or be alerted when our videos are going on. And then you can also, again, subscribe to the Advantage membership, where you get access to all these lock channels. Everything that Faisal does on a day-to-day basis in the stock market, he lists right here. Everything that I do in the FX markets is listed right here. Everything that we do in the crypto markets is listed in this crypto section. So if you want to be able to trade these three markets successfully, come join our community. Until then, have a fantastic Sunday. Enjoy your Memorial Day and the week ahead.